Bitcoin halving is not having as big an impact as each bull run comes around, and this is the findings that have been published by 21 Shares. Bitcoin has historically followed a set pattern or cycle which has repeated every 4 years since 2011, and it has given the investors the ability to navigate the markets through this pattern. So just like the ocean tides go in and out, the cryptocurrency market also goes through cycles that bring both challenges and opportunities for people who are investing into it. So these cycles have times where prices shoot up, and this is known as the bull market, and also where they come back down, which is known as the bear market. These ups and downs are pivotal in shaping our investment strategies and decisions. So the first halving happened on November 28th of 2012, at once 210,000 blocks were created, which then made the reward for creating new blocks decrease to 25 coins. Then after another 210,000 blocks were created, the reward dropped to 12.5 Bitcoin on July the 9th of 2016, and on May the 12th, 2020, it then dropped again to just 6.25 Bitcoin. So after the next halving, this is going to be 3.125 Bitcoin, and this pattern will keep on going until there are 21 million Bitcoins in total. So usually these occasions have caused shortage in supply, and if supply is reduced but the demand for the token stays the same, this obviously causes the price to then be driven upward. So in the 6 months after the last two halvings, the worth of BTC went up by 51% in 2016 and then by 83% in 2020. But it is important to remember that even back then, the value of Bitcoin was much lower compared to what it is at now. So for example, during the 2016 halving, BTC was worth $650, while in 2020 it was worth $8,572. So there's been a huge price increase in this between the two different halvings. So there has been a lot of speculation kicking around this time about how this cycle is going to be different from the previous, and it's going to break the trend. And we can already see how this could technically be true. So previously, before the other halvings, Bitcoin has sat at between 40% to 50% below its all-time high. However, this year we've already seen BTC surge past its all-time high to create a new one at $73,740, which is unprecedented at this point in the cycle. So researchers have noted that the impact of the halving has decreased gradually over time, which has resulted in slower growth rates for Bitcoin's value after each occurrence. So for instance, after the first halving, Bitcoin experienced a surge of around about 5,500% over the 4 years, followed by, I believe it was around 1,250 after the second halving, and then in the third halving it's at roughly 700% in this current cycle. So this does indicate a growing maturity within the market. So one of the surprise elements in the current cycle has been the introduction of cryptocurrency exchange traded products, or ETFs as we know them. So according to 21 Shares, BTC spot ETFs showed remarkable trading volumes, indicating a considerable interest from traditional investors. So they reached a new record high with over $1 billion in inflows in a single day, and this was on March the 13th of this month. And another introduction into the marketplace, which has obviously caused a shift in the usual cycle, is the participation of institutional players, which is altering the behaviour of Bitcoin investors overall. So long-term holders are gaining a lot of significance, and the amount of Bitcoin that is being stored. So another introduction into the marketplace which has caused a remarkable shift in the usual cycle is the participation of the institutional players. So this is obviously altering the behaviour of Bitcoin investors overall, with long-term holders gaining significance in the amount of Bitcoin being stored in exchanges, which has now reached a 5-year all-time low. So if this pattern continues, Bitcoin supply would become less available and potentially lead to a supply shortage and consequently a possible significant price increase. So what does this all mean, and what is next after the Bitcoin halving? I honestly think that this could be one of the biggest altcoin rallies that we will ever see in history. But as we draw closer and closer to the halving, time is running out for us to make sure that our portfolios are exactly where we need them to be so that we can get the most benefit out of this as possible. So one reason that we do still have time to ensure that our bags are all packed is that retail isn't really come back into the market in full force just yet. But I think it is fair to say it's definitely the institutional buyers which are moving the markets right now. So if we take a look at Google Trends, so this is obviously not the greatest tool, but it is a great way to take a quick glance at what the general public are looking into, what they are searching on Google, what they're interested in. It's good to get a kind of sentiment over the market. So if we look into the search, so this is for Bitcoin, and I've set this to over the past 5 years just so that we can see kind of how previous bull runs and what the search volume has been on this, and we can see obviously where it's peaked its interest here. So this is obviously the 2021 bull run, and we can see little spikes here overall, and then we had the bear market. So we can see people are starting to search into Bitcoin again, but nowhere near the level that they were searching at during the bull market. So if we then take a look at people searching, so this is for altcoins over the same period of time. And if we look at right now, so for example, March the 3rd to March the 9th, this is where there's kind of been peak interest in altcoins. And you can see there's a big difference between this kind of search volume and the Bitcoin search volume. So this is one of the reasons that I believe it's going to be a huge rally for the altcoins, not more so than Bitcoin, but I do feel like altcoins are where the money is going to be made this bull run. And if this is what people are searching in, this is what people are interested in, this is what they want to know about, then it makes sense to follow where the money is going to go, because if people are searching into altcoins, that's where they're going to put their money. If they're searching into Bitcoin, they'll be putting their money into Bitcoin. So we want to be following the money. So what do we think is going to happen next? So I think that as we draw closer into the BTC halving, and as the ETF continues to see the level of inflows that they have, it's going to be very interesting to see how this plays out post-halving. So I do expect there will be a small correction in the market, because obviously everything has been on a little bit of a rally already. So a correction would only be natural at this point. But I don't think any of us can say for certain anymore what we can expect from April the 19th onwards. So April the 19th is obviously when the halving is expected. So as we're navigating what is essentially the unknown waters right now, I think all we can do to navigate it successfully is stick to what our profit taking strategy is. We should already have this obviously set out and planned, and just really keep your wits about you. This is not the time to be gambling with your money, and it's definitely not the time to be making uneducated bets in the market. So whilst I do think that 2024 is going to be the year of the altcoins, it's also the year that can really set us up to be financially free. So let me know what you think we can expect from the Bitcoin halving in the comments below, and I will see